In the heart of global finance lies a secret so massive, it could shake the world. $600 trillion. Not in cash, not in gold, but in contracts, in promises, in invisible bets that tie nations together. It's called the derivatives market. A machine built on risk, a system so vast, even those who created it no longer understand how it works. Once, it was meant to protect the economy. Now, it threatens to destroy it, ticking silently beneath the surface, waiting for one wrong move. Damned! This danger, we have to go back. Back to the early 2000s, when greed disguised itself as innovation. Banks discovered a way to turn risk into profit. They created deals based on possibilities, not real products, not real assets. It's just bets. Bets on housing prices, bets on interest rates, bets on people's ability to pay their debts. It was supposed to make the system safer, but it became a casino, and the stakes were the global economy. When the U.S. housing market collapsed, those bets began to unravel. Banks fell like dominoes. Lehman Brothers vanished overnight. Trillions of dollars disappeared. And for a moment, the world stood still. Governments rushed to print money. They bailed out the giants. The system was saved. Or so they thought. Because the lesson was never learned. Instead of dismantling the machine, we made it bigger, more complex, more dangerous. Today, that market of invisible bets has exploded to more than $600 trillion. Some say the true number is closer to 1 quadrillion. It's a web that connects every major bank, every country, every currency, and no one can fully see it. It's no regulator, no government, not even the banks themselves. Every contract depends on trust. Every deal relies on the belief that the other side will pay. But what happens when they can't? One failure triggers another and another, until the chain reaction becomes unstoppable. This is the danger economists whisper about, the hidden time bomb inside modern finance. After 2008, new rules were written, but over time they faded, complexity returned, and the same banks that almost destroyed the world grew even bigger. Now global debt is higher than ever. Governments owe more, corporations owe more, families are stretched thin, and as interest rates rise, the cost of those invisible bets begins to shift. When the numbers move, the system trembles. When trust breaks, panic begins. It won't take much. A single spark. A failed payment. A sudden panic in the bond market. One moment could send shockwaves through the entire global system. The last crisis began with housing. The next could begin anywhere, in currencies. In the shadow banking world we barely understand because now every market is connected. A move in New York can shake Tokyo. A crash in London can freeze Asia. Every action creates a global reaction. Act. And when confidence breaks, everything breaks. Central banks have fewer tools than before. Interest rates are high. Debt is massive. And printing money may no longer be enough. That's why experts call it a time bomb. Not because they know when it will explode, but because they know it will. We've built a system of numbers and promises so huge, so fragile, that even its creators can't control it. And while the world celebrates rising markets and record profits, few realize what's happening underneath. The ticking continues. Relentless, hidden beneath optimism and denial. The truth is simple. The next crash isn't a question of if. It's a question of when, and when it comes. It won't just shake Wall Street. Because the $600 trillion time bomb is still ticking, waiting, and every second brings it closer to midnight.